couldn't do my classes yesterday because of Wi-Fi. There's a Wi-Fi situation which we couldn't be handled until it was around 8 at night. So I couldn't do a class then. So I moved it to today. So today we'll be going to charts. So I'll be touching on some of the things on the charts. So we'll be seeing a lot of drawings, a lot of maybe let's just say, yeah, drawings basically. Let me just say put it that way, drawings and more knowledge on how to view the market as when people start viewing the market. So I'll just start sharing my screen and I really hope everyone is seeing my screen. So, ladies and gentlemen, this is the Forex markets. This is how the Forex market looks right now. It's been like this for a very long time. So let's find our way around the Forex market first so we can all know what's going on, what's what. We know how to use it. So the platform I'm using today is TradingView. So this TradingView, you can get it on the internet. Just type TradingView on your mobile phone or your laptop, maybe, or maybe even your tablets, you know? So you can use it basically on any device as long as it has Google, so you're good to go, you know? So the only thing it will require is for you to log on or to log in, which really doesn't really need information. It just needs your email address and I think your name, and then that's basically it. And your birthday as well. So after that, you open accounts, yeah, then they give you a chart. So let's start like this. So remember in module 1 where I was talking about, I think it was I think it was in the third recording, the last recording we had, where I said price is actually going against time and time is going against price. So this is what I meant. So as you see here on the bottom, this are years. So this is 2018, 2023, 2028, the list goes on, you know? So this represents time. On the very bottom, everything represents time. So you can enlarge time. When you enlarge time, you're practically zooming in because at first you couldn't see 2014, you know, maybe like from here, 2013, you can't see 2014. So you want to see 2014. So you enlarge it and then it will show, you know. So the list goes on. Then on my right here, horizontally, this is price. This represents, these numbers right here represents time. So since you see this is the dollar index, the currency I'm looking at, this is a dollar index. Since we're going to be looking at the example I made about the Russian war against Ukraine and how it made the dollar just practically push up. So the more the dollar pushes up, the more things get very tricky in the markets as well. So, and then there's a lot of tools in the markets as well we can use. Firstly, someone may ask, what is this red and blue things here? What's going on here? What are these numbers for? What is that for? Okay, so let's do like this, okay? So these blue, let me say graphics or drawings you guys see that are moving. Yes, they are moving. These are called candlesticks. Now, there are a lot of charts that represents the markets. So we have a bar chart, which is which represents price in a is yeah. So we have bars, we have candles, we have hollow candles, we have line. These are all charts, they're different charts. So, but we use candlesticks more often since they are more appealing and more precise when it comes to time and when it comes to price and how you can actually analyze properly, you know. So we use candlesticks. So when they're, or for me, so candlesticks, you can use them, you can change them into any color. You can really change them to any color you want, as long as you know what it represents to you. Some people like the charts black and white, simply black and white. Some others like to add more colors, maybe like pink and yellow, you know. Some people, or just, you know, they're just being out there, you know, with their favorite colors. So I chose red and blue since the red represents the bulls, which is they're going down. Since you see price from here is still going down. And then the blue ones represent uh buys, you know, the bulls, the big ones. So the blue ones are actually going up. So that's why you're seeing this candlestick so long still going up. So it means the dollar is still pushing up. So the meaning the the dollar is bullish, as I was saying, since we are still in this crisis of the war, you know. And then on top here, the very far top, that is where we change our time. So there's a lot of time where I can say they call time intervals, so which are time frames, the time frames that we're talking about. So we have the 1 second time frame, we have the 5 second, the 15 second, 30. You have your minutes as well, you have your hours, you have your days, and then you have your weeks and months as well. And you can even get your years as well. And you can only access yours if you only have a premium access onto this platform, though. Let me just put it out there. But the others are for free and they are available like to be of use, you know. So I like to use these time frames which have stars since they represents price to me much more better, and I can actually play a game, you know, since I have one, two, three, four, five, six time frames. I like to play out my odds, you know. So if I'm looking for a bias, if probably I have maybe analyzed the dollar so many times and I'm still not convinced that it's still gonna push up. Maybe from I tell myself, you know what, the dollar is not gonna push up anymore. It's just gonna fall from here, you know. And maybe on the other side, I'm saying, okay, no, the dollar is gonna push up, you know. So I have a lot of predictions, but the time frames will give me a confirmation according to my time frame. So my time frame, since there are six, I should know that out of six, I should probably get maybe a 5 out of 6. Then I'll know a bias for sure. Then the market is going to push up. Then I know it's okay. I'm looking for a bias that's going to go up because of my time frame. So you can use time frames as well as you can confirm your buy frames, you know. So far we are on the monthly time frame. So these candlesticks move each and every month. So look at this. So make an example, right? So this um, price right here, as you can see it was from it was open on the 1st of April 2022, and this one is on the 2nd of May 2022. So each and every month when the month actually opens and closes, and then price actually changes or gives it actually shows another set of price, you know. So this is how you actually predict where the market is actually going about the direction. So now we're going on to the weekly. The weekly, now we see that, okay, on a lower time frame now, it's keep on showing that the buy is stronger, you know? So it's still gonna push up. So I'm having a bias to, yo, okay, the dollar's gonna push up for a bit, since I'm also seeing that the market is being choppy, you know? So there's a lot of things that you can see in the market using time intervals, you know? So since I'm on the weekly, these candlesticks only move every week, you know. So once the week closes and the one that opens, or once the week ends onto us, like when we reach Friday, the candlestick closes. And then when we open the market on Sunday, that opens another candlestick, you know. So it works like that. And then we have your dailies. So these ones move each and every day, you know. So since the market, you see, it was very bullish and it broke the previous high, which is here, which was here, and then now it actually made a new high, which is not really a new high, since you can see the higher time frame, and we've been on the monthly showing that the time is actually the dollar is actually picking up now. So now I'm also seeing like, okay, the dollar on the daily is also saying something else, you know? And then you can go onto your times as well, which is your 4 hour, and then you go into your 2 hour, then you go into your 1 hour, and then your 5 minutes. So it's basically the same thing, in which you can adjust and make it look like the same uh, time frames on the top, but every 15 minutes, this one moves. This one moves. Every 15 minutes, this one moves. So as you can see, even now it's moving, it's going down. But this is what I'm just showing you, is like, this is how the charts looks, okay? So now let's jump onto the type of instruments that I'll use now. So now we have your crosses, which is the one I'm using now. It's like you have your horizontal and your vertical axes, you know, and then we have a dot, where it's basically now it's not a crosses, but it's like a dot moving around. So you can use whatever you want to use. And then you have your trend lines. So you have your trend lines, your arrow, your rays. A lot of things will be used during the technical analysis phase, because we'll be doing a lot of technical analysis. We'll be dealing with charts a lot. So you will need yourself a pretty good phone that will give you a nice view of the market. So this is just a trend line. So you can actually see if maybe, but I don't use trend lines. So I don't know why I'm showing trend lines. I don't use trend lines, but um, yes, a lot of things can be shown in the markets, you know. So now there's a lot of advantages for it. So now we can literally tell in the next future, like, where price would be. So this is how we are ahead on view of the news sometimes, because we can see where the news will actually take the markets, because you already know why the news says so, because technical analysis literally gives you everything you need to know about the economy and what might happen, you know, in the near future, and what to expect as well on what comes from news. And then when I'm talking about news, there's also a website that I use for news as well, for people out there who are wondering. I use Trade, um, it's Forex Factory. Also, you can go to Google as well, search Forex Factory, and then you're gonna have to log on as well. Then you'll be able to view your news. This is where you can actually see the headlines of overseas, like what's happening in the news, what's currently happening in the United States, what's happening in the in the in England, you know. So you can know a lot of places, and this is where we practically live, you know. Like we simply know when something is what's going to happen just looking about the tweets, because now we can even see tweets from big people, you know. So Twitter is also involved here and giving you the information that you need as well from high-tech investors, you know. So there's also calendars. There's a calendar that tells you when the important news are going to hit. And this is where I know I actually found out that the market doesn't really, or I can say news doesn't really like to take out major news on Monday and Fridays. You should really look it up, like go to Forex Factory and maybe next week. Just look it out. On Monday and on Friday, you won't get major news, but you'll start getting major news from Tuesday. But for sure, you're gonna have major news on Wednesday. So I can essentially say Wednesday is the peak of the week. So literally, when you're on Wednesday, a lot of things happen on Wednesday, and then it falls onto Thursday, and then it just dies down after it, you know. So when that happens, you know that a lot of times um, we're gonna have a lot of volatile movement on Wednesday, and then you're gonna have uh, probably a lot of volatile movement on Friday, because Monday and Friday is a lot of manipulation. When I'm talking about manipulation, I'm talking about where central banks actually use their power and their advantage to actually take out people in the markets, like to take their money. So that's what we're gonna call that manipulation, you know. So they actually do that to, like, to be sure, they really do that. But I will explain in a later stage why and how they do that. So the reason why you're seeing USD only here, it doesn't really come like this, like to put it out there. It doesn't really come like this. The calendar has a filter. So a filter, you can filter out what type of currencies you want to look at, you know, and they have a specific way of representing the impact of the news, you know. So they have this red factory looking building, which has a major impact, as you can see, has high impact expected, which, so you're going to have those CPI, you have your former MC, you know. So those news are usually having those red buildings. Since you see it right there down there, USD at Wednesday on May on the calendar, we have uh, that red flag right there. You know, we have the red building. So the red building will actually show that, okay, this we're expecting high impacted news tomorrow, you know. So you can also tap onto the file and also give you a preview of that news, like what happened last month. You see, like, since we know, like, from from the 12th of June on 2020 that there's an actual the forecast in the previous. I know it's a lot. I know it's a lot of things. So I'm gonna stick to one. I'm not gonna fall into this one as yet, because we're not reached fundamental we're not fundamental as yet. So we have minimum impact, we have small impact or low impact, and then we have this one's non-impact. But the news I like are medium impact and a lot of impact. I liked those news since they give that push to the markets, that volatile move, you know. So I also filtered out some currencies since my focus currencies is the Japanese yen and the USD. I really like to focus on those two currencies because the Japanese yen, there's a lot of things happening in Japan and in China as well. There's a lot of things, even South Korea. So those views, that side is interesting. So even their pairs are very, very low on spread as well, and they give out a lot of capital as well. And then we have the type of news as well. So we have your growth, which represents your GDP, your inflation rates, your unemployment rates, central bank news. We have your bonds, which is your CPI. You have your housing commodities. You have, which are housing bonds as well. Yeah, it's under bonds. And then you have your customer surveys, business surveys, speeches, and mics. So there's a lot of things you can do on Forex Factory, and you see on the side also it gives you was like what type um, of week you're in, from week 8 to 14. So it keeps you up to date. So you essentially up to date. So I really, really think that tomorrow we're gonna have a high impact news gonna push the dollar to the upside since the dollar really, really pushing itself so far. But I feel like right here we're gonna have a smaller push the downside first. I have a reason why for that. So we're gonna learn that when we get into smart money analysis. So which is the analysis I use to analyze the markets. So I know what the market's gonna do before it even does it. So that's how I'm gonna actually use that. So um yeah. So now let me go to where you can find your currencies. So now there's a watch list, and then in your watch list you can add your currencies. You can, which is add symbols. So you have your all your currencies. So you find your Bitcoins, you find your Nifty 50, all your golds, your Euro USDs, your gold index currencies, your sports, your a lot of in the XPX 500, Tesla, a lot of stocks. If they say all, it's mixed. So here it's just mixed. It's just stock mixed with index, mixed with currencies, mixed with a lot of things. There's mixed a lot of things. So when you talk about stock now, you are specifying now. Now here we are only just looking at stock. So when we are trading stock, we are literally trading companies. We're trading your Netflix. Here's your Netflix. Here are a lot of your Tatas. There's a lot of companies on this markets. All your companies are there. So if you wanna, in a way, be a person who can capitalize from a company, and if you know a company that much, you can capitalize from their news on the market. You just buy and sell their shares on this market. So you can even buy and sell shares on Google. Imagine just sitting at home and buying, selling shares on Google. It's just that wonderful. And then this we have your futures here, where We talk about your oils, we talk about your coins, talk about your mini treasures, your bonds, your coppers, your silvers, your nicks. There's a lot of things that we look at when we talk about futures. But we on futures we don't really trade futures that much. We don't trade futures. And then when you go to forex, that's where you find your currencies. That's why I said forex is a currencies playground. The moment you just say forex, you're just in currency. Just know that you're in currency. So this is where you get your British pound against the US dollar. You get your US dollar against the yen. You get your Australian dollar against the dollar, United dollar. So you get a lot of currencies here. So here are mixed as well, you know, all your currencies. So for instance, if you are interested in Paris, just to say like you're interested in Paris, so you can find like your a currency that's in France, and you can literally make money out of that. So not really, but by looking at news on France alone, but um, what's happening in the major currencies, because here the major currencies rule the market. And when I'm talking about major currencies, I'm talking about your your GBP USD, your Euro USD. That's why they are on top of the food chain, literally, because they are the most lucrative um, currencies in the market. And then we have your cryptos. This is where now you find your Bitcoins. You see, you have your Bitcoins. We have Ethereum. Yeah, well, we have Sol. Some others don't even know them. I don't even know them, because I don't really trade Bitcoin. I don't trade Bitcoin because their markets are very, very, very volatile. And then we come to index. Now, when the index now, we are in the Wall Street markets. The Wall Street markets, we are literally looking at the businesses, which is essentially the stock markets. It's under the stock markets, but this one is the Wall Street markets. It's under the stock market as well. This is the Wall Street markets. So we have your Nasdaqs here. We have your S&P 500. We have Dow your Dow Jones, which is your US 30. We have a lot of indices here, your major indices, where all major companies of, let's just say, from different currencies are combined in these indices. So the major companies who do or collect more income in the group essentially control the market, so it's kind of the majority rules. So the more companies do well, or let me just say the companies that have power do well, then you can see your markets or your your Nasdaq is going up, so if those companies don't do well as well, they go down, the market goes down, So there's a lot of things. So there are bonds here as well. There are bonds here. I don't trade bonds. I don't really trade bonds. And you have your economy, which essentially stocks and indices that deal with the governments and central banks in those company or in those areas or in those economies. So this is where you will find all the indices you want. And then once you select it, it automatically pops up your watch list. So this is going to be your watch list. You see, this is where the euro I just clicked on now. It just popped out here. You know, it pops on your watch list. Your watch list is where now you look at your currencies, you know. So this is the currencies that you focus on. These are the things you trade because you know this, because you have knowledge about these currencies, you know, of just because of maybe you heard something on the news and you want to trade that because you heard something on your news and it intrigued you to trade those currencies, you know. So you put it on your watch list. So once you tap the watch list, it automatically switches onto the next uh, um, charts, which now we're on the Euro USD. So remember I said the euros are literally falling. So the more the euro falls because of this war, the more the dollar uh, goes up, you know. So in here, I'm literally waiting for something to happen. I'm waiting for it to also trace back a little, a step back, and then a push down, you know. So I'm still gonna capitalize on, we are still gonna capitalize on the euro because there's a lot of moves happening on the euro. We're gonna still analyze. We're gonna have analyzing Sundays. I cannot wait. You know, I just cannot wait. But you know, we have to get that knowledge out the way first. You know, so we can have those conversations. You know, I can't wait to have those conversations with y'all. You know, have a conversation on the market. You know, so since you guys understand what's going on in the market, you know, so this is currently the Euro Japanese. This is what I was talking about what's happening in Japan. There's a lot of things happening in Japan, you know, but the base forex, which is the forex that I'm trading, or which is the currency that I'm trading I'm betting on, which is the United dollar. Here, the United dollar is in control of the Japanese yen. So the more the Japanese yen or the more the dollar says it's buying, the more you'll see this graph increasing. Like it will just push up just because you know that the dollar will push bullish and you know that the yen has no other option than to just bow down and just listen, you know. So we also have your gold, you know. I trade spot gold. I like trading spot gold. It's much more volatile. It gives those proper trades, you know, and it gives but it's very, very volatile and very choppy, you know. But once you understand gold, it's actually quite understandable and it's easy money, you know, but it's not really, really that easy, you know. I'm not saying it's difficult. I'm not saying it's undoable, it's impossible. I'm just saying that it's kind of tricky sometimes because gold can really do its own things. It can really do its own things and it can just, you know, um, sometimes make your day sad, you know, because it's choppy, you know. But gold is very, very lucrative, very lucrative. If you want to jump into gold, just make sure you have a very substantial amount in your account. You know very well that whatever happens on gold, you won't be affected that much. And another thing, when it comes to depositing money, please deposit amounts that your guys are willing to lose. I am certain when I'm saying this, the money that you are investing in the markets, we are not sure. We all are not sure if that money is going to come back or not. You know, we are not sure. So I'm just putting a word of caution that any amount that you have, there's not a certain amount. Well, there is a certain amount if you really, really have confidence in yourself and have that I can say money making strategy, you know. You can start with $100, which $100 1,500 in US in South African rands, you know. So that as well, you know. So that's the only minimum if you really are willing to step up your game. You know, if you want to start with $100, then you know start with your 1.5 and then just push up. Guaranteed your money is gonna come back if you trust yourself that way. Because even you can come in the market trusting yourself, the markets can really, 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 really do its own thing. You know, the market does its own thing. It does its own thing, but we can predict what it might do, you know? So we are making money out of a prediction that it might do this, you know? That's why we have strategies to actually give us those predictions, those correct, precise predictions, you know, so that we won't catch the market on the wrong side, you know? So these are all things we use in the market, you know. So everything I'm teaching you guys go in hand. So understanding everything is important to understand what's happening in the market, what's happening in front of you. Because when time goes on, you guys will be essentially living this life and be the ones who are working, working with it. Your mentor saying you must do this and do that. So no, you don't do this, do that. I won't be there. You'll be there, you alone, you know. So understanding this and knowing what's happening here is really important. And knowing how to do it, it's much more greater if you have the knowledge why you doing this, you know. So in the market, when you analyze, you always have to have reasons, you know. So my strategy always completes your reason and it gives you no worries, you know. Um, the US 30, no, not the US 30, I mean the NASDAQ, the US 100, people say the NASDAQ, you know, we as traders call it the NASDAQ. So the US 100, this is where now when we talk about US 100, we are essentially trading stocks. This is where we are trading stocks. So since now we see it's so red currently, it's just that the stocks are falling, businesses are losing money, you know, and that's bad for investments. That's bad for investors, you know. So a lot of people are selling shares now. For with all of us who are celebrating that Elon Musk bought Twitter, you know, for $4.4 billion. Imagine he just bought Twitter just like that. But we're also looking at the fact that the Twitter had to be sold first. You know, they're selling shares. People are I don't know what's happening in businesses, you know, but overseas, price is just gonna drop. It's gonna keep on dropping. But the way I look at it, the way I trade, it's just that we are looking at markets reaching this level, that level right there. I have a reason why I'm saying that level, because firstly, uh, my analysis tell me that if there is inefficiency on or in price, which there is imbalance, I'm going to teach you about imbalance. You know, don't worry, I have your back. You know, that's why you're here. You know, for learning that I have your back. I have you. You know, so imbalance is where there's unfairness in the market. So now the market is going to correct its own errors, you know? So now the market is going back to correct its errors. These candlesticks, not this one, two. These two candlesticks have imbalance. And right here, there is going to be a lot of um, volatility around markets because market price will want to push down. But it will actually eventually push to the upside again, when time goes on, So as well, this is how we analyze, because we have to know the knowledge, we have to understand why we are saying that, because our strategies as well have their own information. So information is important, meaning classes are important as well. Classes are very important. So me being here telling you how the market operates, it's valuable information. Classes are very important, So we're going back to the United dollar, and this is where now, for instance, let me just predict on this one. This one, we're gonna have a nice volatility movement in this area because we have an order block. We have a higher order block in this area right here. When I talk about order blocks, I talk about where smart money had their orders open and closed. So they can literally manipulate the market by opening large accounts to the opposite direction just to take your guys out, and then they add more entries in the market just because there's space now, and they take in the market to another direction, So that only happens, that's only effective, the order block is only effective once it breaks structure. For instance, if market breaks the structure right here, it breaks this line right here, it goes to the upside. The reason why I'm saying it's going to fail going above this line, we're going to have choppy movements. It's either going to chop to the upside and then give us a nice retracement in this area, and then come back and retrace and go to the upside, So the reason why is just that we have an order block. So market likes to come back and retest order blocks, So we have a lot of things. We have a lot of options in the market. One thing about the market, let me tell you real quick, the market really gives you what you see. If you see a buy, it will give you a buy. If you see a sell, it will give you a sell. It's just that when it happens, you don't have control, because once you're in the market, they enter the buy on maybe let's just say the euro, enter the buy on the euro, and then you're seeing still going down that yo. Essentially your money is gone, you can't take it back, you can't, unless you close those wrong trades, and then you reanalyze in a later stage, and see like, yo, what happened, like what happened, how did I lose money today, so that's another way of coping with maybe, let's just say, your losses. This is part of psychology, which is a module on its own as well. We're coming to psychology, So this is where you can also get news as well. You can get alerts. You can set alerts here where you can say, please remind me when price reaches a certain place. I want to see how price will react at this place, Probably, let's just say, let's put an alert right there, So I put an alert there. So create. So once it's there, once price reaches this area, I might say, okay, since now it's going to break in this area, will price change direction, collect liquidity and change direction to the upside, or will it lose momentum, then gain momentum, and then come back to retrace, you know? So all those things will give me options. Okay, if it markets really pushes down, I know that, okay, I will sell the market at this level right here. Or if markets here push it to the upside, then I know that, okay, I'm gonna buy at a certain place, you know? So it activates your alerts here, you know. You also have headlines here about what's happening in the euro against the dollar. You know, you get markets, you get commodities, what's happening, you know, in Tuesday, what's happening in on Thursdays. So it has headlines. So this was an hour ago, you know, the dollar choppy with inflation data on DEX. So now look at what I just said. It just proves my point where I said the market will be choppy. This is what it meant. An hour ago, they just said this, and I just read that now. So I already knew what the market is gonna do, you know? So this is the great thing about the mixture of technical analysis with fundamental, you know. So because now you understand what's going to happen in the markets, you know. So you know when it's choppy, you're gonna stay out of the euro dollar, you know you're gonna trade something else, you know, which in choppy moments they won't be that volatile, you know, so you can make easy money coming in, you know. So here we have data window. So here it tells you uh, where the candlestick is, the open of the candlestick. Yes, the candlestick opens is a certain price where candlestick open. So they tell you the price of the candlestick, the open of the candlestick, the highest high right now, the highest price where price has been, it's been this high, you know, and the lowest low of price where it's currently at, when we talk about price, we're talking about this candlestick, you know, we talk about this candlestick alone since it's open right now. It's talking here is describing the candlestick on its own, you know. We know the close of the candlestick, but it won't close as yet since it hasn't the month hasn't ended, you know. But for now, if the market closes, it will close in that area, you know. So it tells you even the volume, you know, and at what rate is it changing at, you know. So you also know, is it very volatile or not, you know. So you can tell the market if it's volatile or not. And then you have hotlines where essentially you can move into stocks, you know. So here we can move on to stocks because stocks can literally tell about a currency what a currency might do, you know. Because if you analyze the dollar alone, the dollar is not is a currency, but here it's represented as an index, you know. So here you can have your indices here, so where you can literally tell where price in the euro is going. And then you have your calendars. So your calendars as well will give you your news. You see, they also give you news as well, like at what time would what happen, you know. And it also gives you as well other gold commodities as well, like the commodities at what range are they trading at, you know. So the estimated price, you know. So everything is listed for you, everything is given onto you. And here are this is where you can essentially create your ideas. So now, since we had two ideas, now we had just firstly saying it was choppy and it's going to go down because the dollar is going to be choppy and go up. So we can write that here, and then you can say that later, you know. Here we have public chats, so people here talk about their ideas about what's going to happen in the charts. So here there are no rules. Essentially, there is no way of talking. So you'll be talking to people in Afghanistan, you've been talking to people in the UK, you'll be talking with people in Portugal, you'll be talking to people about in a lot of places who are traders who know the markets. Some of them know the markets, some are here just for laughs, you know. So I don't use this platform for my sake because I don't like noise. I don't like people telling me a lot of things, you know. So I just stick to one place. And then there are private chats. Private chats, you can have them with anyone, maybe on a private level, you know. They also must have the same premium level as you know. So ideas teams here we you can capture your ideas where essentially let's just say you use your path here and then you draw saying okay the dollar went up, it went down, it went bullish again, and then it couldn't push to the upside because of this high, so now it pushed to the downside. Since it pushed to the downside, we might see a choppy movement going this way and then a push to the downside. So this is where now you can capture this and then add it here to your streamlines, you know. But this is where you only paid only. So I'm just letting you guys know as well. So there's a lot of things that we can use in the currency market or in the forex markets, you know. So let's just there's a lot of things. There's a lot of things on trading view today. We won't unpack them all today. But as time goes on, we will be using this platform for a very long time, since this platform is much more proper on analyzation and creating your own space, your own trading area, you know. And this is the actual price markets. There's no filter. There is nobody's going to manipulate this area, you know, unlike MT4 and your MT5s. Currently, I don't have one on my laptop. I don't have any app of MT4 and MT5 because I trade on my phone. I don't trade on my laptop. It's much more easier knowing that I can be somewhere else. Then when I remember that I have trades on, I just pop up my phone, adjust stop losses, and then or I just may take profits or I close the trade or position and I just take my profits and leave, or I know that I just take those losses, I cut those losses short, and then I just move, you know. So it's better on my phone, so I can't show you an MT4 on my laptop. But once I do have an MT4, we'll go through it as well. MT4 is also the same with TradingView, but TradingView has more tools than TradingView, you know. So that's why we'll be using TradingView a lot. You know, you can also have TradingView on your phone. I think I've said that as well. So on TradingView as well, something that we'll touch on when time goes on, when we have time, or maybe we're analyzing during our Sundays, we're going using the replay button where we essentially going back in time and setting time and really testing our strategies, like are we correct, you know. And so you know what price might do in a later stage. So essentially it's like rewind in time and like replaying it again, and you're trying to see how price works in certain areas, you know, and or certain prices. But we'll talk about that when that time comes as well. But anyway, I feel like I have adjusted my time today. I'm so sorry for being over the limits, but I think that's where we will stop our program or tech class for today. So is there anyone with questions? Or let's just say, let's just call it a day, and everyone be on their merry way. Okay, Nimrod's thumbs up. So Nimrod's ready to rock and roll and go. Okay, as well, this recording will stop now.